Oil taking a dive, crude prices falling yesterday after Mexico threatened to derail a deal among OPEC plus countries to temporarily cut roughly 10 million barrels of oil per day in production. There are also concerns the production cuts won't be enough to ease the oil glut as the global demand is expected to drop about 30% just this month amid the COVID-19 coronavirus crisis. G20 energy ministers meeting later today to discuss further cuts. Joining us now, Lipow Oil Associates President Andy Lipow. Andy?
Good morning, Dagan.
Talk about the reaction in the oil markets as oil prices drop. This production cut not enough. What do you make of it? Do you see more cuts down the road, and the role of Mexico in all this?
Well, I think the market yesterday was quite skeptical when they started seeing some of the details out of the OPEC agreement. We saw a swing of 20% on oil prices. And one of the reasons is this 10 million barrel a day cut also depends on an additional 5 million barrel a day production cut from the U.S., Canada, Brazil, Norway, and countries outside of OPEC who have already said they're going to depend on market conditions for a reduction in the amount of oil supplies. Meanwhile, we just saw overnight that Mexico is really not interested in cutting 23% of their oil production, which equates to 400,000 barrels a day. They're more inclined to do 100,000 barrels a day. So it's really difficult to see how you get OPEC and OPEC Plus all agreeing to this massive production cut. And then the next thing the market thinks about is what kind of cheating is going to go on or non-compliance as everyone agrees to a headline number but doesn't comply.
Brian Brenberg, jump in.
Sure, yeah. So, a bigger cut would be more helpful in terms of stabilizing prices, say 20 million barrels a day. But the bigger cut you get promised, the more likely it is that member countries or non-member countries won't comply. And Mexico is a good example. They're not interested in cutting supply right now. So is this really the best we can hope for, given that possibility that you just get rampant cheating, rampant non-compliance?
I think it is, because what you see is everyone is waiting for the other guy to cut oil production. And as oil prices rise, even assuming we got a headline of a 20 million barrel a day cut, if WTI prices went to $25 or $30 a barrel, what you find is the domestic producers on a cash operating basis are not interested in cutting production because at least they have cash coming in the door.
I just want to point out the national average for unleaded gasoline is below $2 a gallon at $1.88, but we can't take advantage of it. Nobody's driving anywhere except maybe to the grocery store or a Walmart. John, do you have a question for Andy?
Well, yeah, it actually relates to what you just said, Dagan. We're talking about the benefits of a production cut. Yes, that'll help Texas and North Dakota. Those states are in real serious trouble with what's going on with the energy sector. But, in a gasoline price cut is a tax cut for Americans. Home heating, it cuts the price of home heating oil, and it also cuts the price of gasoline. So why are we cheering for production cuts when Americans could benefit from a lower price?
Well, I think you reach a point where, yes, it's definitely true that the U.S. consumer is benefiting for a lower price. But the flip side of the argument is that the oil industry, the energy industry, is providing a significant amount of jobs across the nation, not only for the oil producers, but for the service industries that are supporting them, as well as I think about all the restaurants or the retail sales that happen in North Dakota, Texas, California, or even Alaska. So there is a big industry and a jobs issue regarding oil prices. But it is true that the American economy, and for that matter the world, runs on affordable or cheap energy prices.
Andy, good to see you. Thank you so much. You have a great weekend. Thank you for being here, taking the time. Stay healthy. Andy Lipow. President Trump just